Don Cardinal. I'm the Managing Director of Financial Data Exchange. I appreciate the opportunity to moderate this panel. We've got some really smart, interesting people. So my job is to ask them interesting questions and stay out of their way. We're joined first by Meredith Fuchs, General Counsel of Plaid. Meredith, would you mind saying hi?
Hi, my name's Meredith Fuchs. I'm Plaid's General Counsel. Delighted to be here. Thanks so much, Don, for welcoming us.
Pleasure. Then Lynn Scheck of MasterCard.
Good day. I'm Lynn Scheck, and I lead the sales and client success teams for the mortgage and other verticals within open banking at MasterCard.
Thank you. Shmulik, would you mind saying hi?
Hello, I'm Shmulik Fishman. I'm the CEO of Argyle. It's good to be with you today.
Glad to have you. And then we've got a late minute substitution. Kurt's a little under the weather. So we have Brian Karini-Pashicki from Pinwheel. Brian.
Hey, Don. Hi, everybody. Thanks for having me. I'm Brian. I lead partnerships at Pinwheel. I am a poor substitute for Kurt, but I'm happy to be here. Thanks for having me.
That's wonderful. So for those of you in the audience don't know, we have the aggregators here. They're an important piece of the ecosystem. So I wanted to jump in immediately for our audience who's watching with bated breath. Really, can you share some insights about how your organization's partnered to actually support the mortgage industry? Ladies first.
I'd be happy to jump in. So just to explain for folks who may not understand what a data aggregator does, my company Plaid and other companies on the line here, we basically help people connect their financial accounts with FinTech apps or lenders that they might want to use. And so the way we partner is, I'll use mortgages as an example, given our crowd today. In the past, a consumer would typically have to collect stacks of paper, from their different accounts so they could bring documents to a loan officer and share their financial information and verify their income and assets. It could take days to put together the data, and then you had to physically get it over to the loan officer so they could do underwriting. Well, today there's technology powered by companies like mine that make it possible for this same thing to be accomplished digitally. And we'll talk about that more during this panel, but it makes it possible to be a lot faster for the entire process and for it to be more secure and more accurate and make the whole opportunity to get to the mortgage much more smooth. So that's a high level of how we partner.
Yeah, and I was going to say, I would just add on to that. The world's become more and more digital, right? Consumers are expecting digital experiences from the most basic things like getting their groceries and their food to doing online banking to even the most complex transactions such as a mortgage. So this digitization and the use of open banking data and the other types of data, open finance generally, I would say, definitely helps meet consumers where the demand is now. And so for mortgage, which is, as everybody on the line knows, a complex, large transaction. Anything we can do to take friction out is going to make the consumers happier, and they're demanding it. So lenders, in particular, need to be focused on how they're delivering, where the customer is, and how they meet the customer, their borrowers where they are today.
I appreciate that. A bit of housekeeping. This call is being recorded. I was asked to remind everyone of that, so no pressure. So Brian, I don't know if you wanted to weigh in on that question.
Yeah, so we're a fintech company. We like automation and we like getting rid of manual processes. And there's a lot that I'll talk about, but specifically with respect to how we're supporting the mortgage industry, we have a product called Smart Branch, right? I watched my parents actually walk into their local Bank of America to get their mortgage. So while people are increasingly doing things via digital channels, we want to meet people where they are. And often that means when you're making a big financial decision, you want to be in a branch. And so we equip bankers with a QR code that helps them walk through people how to connect their payroll account to the banking app. And that's all tracked on a banker by banker basis so that banks can build incentives to get people to link and share their data easily. So this is true of account opening as well. A lot of account opening happens in the bank branch, even though later on you become digitally sort of engaged.
Yeah, I think the word partnership is a really good one. There's this big separation right now between a lot of very rich data sets that are at payroll systems and the complexity around getting access to those data sets. There's something like 250,000 registered payroll service providers in just the United States alone. And being able to digitally access all of those is exceedingly complex. Not just for us that are on this panel, but think about a mortgage operation or think about a lending operation. It's really hard to get a handle of all these data sources. And a big part of what I think we're all working on is to simplify that and to streamline that. So that way, through a single service like Argyle, you can access all the different payroll processors that exist in North America. I think there's many other parts of this partnership around data accuracy and data granularity, and we're going to talk about that more, but we want to make it really easy and simple to access the data that is inside of payroll.
So we mentioned on the prep call, you were really talking about how important the user experience was. Certainly data quality and speed, but an interesting question you asked the other panelists, so I'm going to put them on the spot. And if they could prioritize, if you had to hyper focus on one, would it be UX? Would it be the data quality and breadth, or data breadth, the amount of data you have, or would it be on quality and speed?
Yeah.
So
there might not be a one size fits all here, right? I think that one of the things that that we want to make sure we can provide is customization for each one of our partners, where some partners really might care about how much friction is in their lending operation and want to minimize it at every step and are willing to do that at some cost around data granularity. And then I'm supposing that there's some others that might make a different trade-off. But maybe we can all go around and stack rank.
yeah.
I would probably choose two. One, I don't think any of it works if you don't have data quality. We don't get the confidence from the lenders. We don't get the approval from the GSEs to use our solution. So if you don't have data quality, it's just, to me, it's a non-starter. That said, the second piece that stops us from being successful is if we don't have a good UX and the consumers won't take advantage of it, then it doesn't work either. So to me, those are kind of the table stakes, I would say. Anything that anybody here is representing and doing is faster than the old way. So I'm not sure incremental speed is, how many seconds versus a minute. I am not sure that we all focus on that in a digital experience, but I'm not sure that's the biggest thing when you look at kind of what we're replacing from a process perspective. So I'd pick data quality, and then I would pick making sure the UX is one that the consumer will go through.
And I would add two others. I mean, I know you asked us to pick one, but there's a couple of other really great attributes to this kind of system. One is transparency for the consumers, who are the goal of the entire system, because this kind of consumer permission data sharing allows consumers to have more clarity about what is being shared about them. And if there's errors or there's issues or there's concerns, they don't think it's complete enough, they have a much easier ability to actually influence that. And the second thing is, I think that this process is really good for fraud reduction, because information is coming directly from the source of the data and going to the loan company, the underwriter. And so as a result, you don't have a system where people can be presenting false documents. It's much more easy to validate that it is the right information and that it's fresh information. So I don't want us to forget fraud reduction, because that's obviously really critical in the mortgage industry.
Liar loans with 19-year-old neurosurgeons never happens.
So, Don, I'll be the contrarian on the call and say that user experience is extremely important. I think we all agree that both are really important. But if someone never links, they never get the benefit of any data access. So there's a world in which you want to make it really easy for people to do. You want to make it ubiquitous. And then you add sort of additional data sources as you go. So in era one, maybe you have a smaller data source and people are really used to that data flowing over and being usable. And then era two, you expand upon that after people know that it's really simple and easy and even fun. And so, yeah, that's what I would say.
Thank you for disagreeing. It always makes panels a lot more fun. One of the other things we were doing, and you touched on it earlier, Meredith, with fraud reduction, but when we talk about data aggregators and the standards you all use in clear disclosure, they're all FDX members, and data standards that the GSEs have stood up. Can you just let's level set for the audience kind of the benefits? I know there's a laundry list, but I think it's important to call out all the things that you're helping do to help make their days easier and more problem-free. So you mentioned real-time data direct from the source.
Yeah, I mean, I would say, you sort of like prompted a little bit the value of having standards. At the very early days of this consumer permission data sharing industry, there weren't standards that were agreed upon by the industry. And as we begin to start to develop agreed upon standards, we can move to safer, more secure, and frankly, more reliable services. So for example, now the industry is moving pretty quickly to API-based data sharing. And there's a sort of generally shared industry standard for what that should look like. And that means that both data providers and data recipients can have some certainty about the way data is going to be shared and the way it's going to show up. So that's made it much better across the entire industry. I kind of want to go back to the last question a little bit because we haven't mentioned it at all, and maybe we'll get more into it later. But one of the other really great things about consumer permission data sharing is the ability to expand access to appropriate credit. And so I just want to throw that out there, and we'll talk more about it, but I want to make sure we don't forget it. So we can come to that as the next question, Don.
Maybe to dovetail on that, because I think that expanding the credit box and giving more consumers the ability to get a loan and process a mortgage is really important. And to get really practical, if you've looked at pay stubs in the past, you'll notice that there's no two that are the same. They're all different, and they have different data on them. And this is a real struggle, not just for consumers, but it's a real struggle for lenders as well, because there are no standards around pay stubs. And if you have income perhaps from non-W-2 work, perhaps you're a gig worker, or perhaps you get money from Upwork. These are all different types of income, and they show up very differently when processing a loan. So a big part of the promise at Argyle is to unify this so that base pay means base pay and job title means job title. The simple things like that are not necessarily true in the old world. And I think what's so great about each one of these platforms is that we have this unified data schema where you can go online and see what data we make available, and it's always made available that way. And it's a big difference over the legacy or analog ways of extracting this data set.
Yeah, no, I appreciate it, because VOI, what is income? There's an entire internal code about what is income, and wow, does it different? But they all have this. My fear is not just granting somebody more credit than I should have because I misunderstood the data. My big fear is denying somebody credit I shouldn't have, because that could be a regulatory finding, and that's all. No one wants that. And honestly, that's fair. One of the things you mentioned, I don't know, Linda, if you wanted to weigh in on that one. If not, I was going to pivot to something else that Shmulik said.
Go ahead.
Well, you mentioned, what data the customer did permission, but I wanted to then call out in post CCPA world, what data they didn't permission, and how we actually safeguard over permissioning and that. As I think you're all active in that space, and I want to make sure that the audience gives you props for what you are doing. And Shmulik, let me go ahead and start with you, and then we'll go back around through.
Yeah, well, our service works on user permission. So a gating factor to access anybody's income, whether it's Uber income or Target income or income inside of ADP, requires that consumer to permission it or to accept that this data will be shared. And I think importantly, they have the ability to turn it off or to come back in and remove that permission. And we make that a dual track where they can do that through our lender or through the lender that we're partnering with, or they can do it directly with Argyle. Something on over permissioning, and it goes into the unification of our data standard. We're not fetching random data out of payroll processor, right? We have a confined list. It's a fixed set of data fields. And we're not fishing for your manager from last week. right? Or your t-shirt size. That's not one of our data fields. And so we're minimizing the amount of data and only pulling out data that is part of our income data schema. And I think that's a really big benefit, again, over just sending social security numbers around the internet or asking people for documents. Those other methodologies try to maximize the amount of data that is being extracted and instead of trying to figure out just the right amount of it.
So Ryan, if you want to
Yeah,
pile
I
on.
think I have a fairly similar answer in that, you know, what we do always has been and always will be consumer permissioned, and we have to teach people that it's at the time that the data before the data actually moves, right? Which is actually a huge sort of change in the industry. There's a whole industry where the data moves well before anybody actually asked it to move. And so consumer permissioning, when we explain it to people, is actually a sea change transformation in how they think of all this. And then to the point already mentioned, it can be revoked at any time. And we make it clear, we take on a lot of legal obligations that I can go into later. We took those on as a very small company to make sure that we had the right processes and standards internally so that if we got it wrong, someone could come to us and get it right. The clear difference on this panel, I think, with respect to some of those obligations, so we can get into that. But we've taken on tons of obligations, and we did it willingly because we thought it was the best thing for the industry.
Appreciate that. Lynn or Meredith?
Yeah, I think I was just going to add that, you know, from the MasterCard open banking perspective, we really look at our data responsibility principles, and that's that people own their data, they should control it, they should be able to benefit from the use of it. So again, everything we do is consumer permissioned. It's at the time, so they know exactly what they're permissioning, should be clearly explained, and again, ability to revoke access as well. The other layer I would add on top of that is that we function as a CRA, a consumer reporting agency, for providing data for credit decisioning. And in that case, that adds a layer on top of the consumer ability to review and dispute that data in a way that they're very familiar with from the bureaus. So making sure that we have that consumer trust and that they have that control and know what they can do to cut off a flow of data or to limit what they want to provide, I think is a key piece to the privacy question that you asked.
And I'll jump in with a couple other thoughts. I mean, I love that everyone on the panel has talked so much about the consumer's control here. At Plaid, our mission is to unlock financial freedom for everyone. And so we start from thinking about the consumer. And a couple of things I want to make sure everyone in the audience understands. We mentioned a couple of times earlier APIs. So I want to make sure people understand that an API is a way of kind of translating data from one system to another system. And one of the things that's been really great as the industry's moved to API-based access is that we've been able to have a really good discussion about what data elements should be shared. And FDX has obviously been really central to that kind of a discussion. So I want to make sure people understood that. And even in situations where we're not able to use API-based access, you know, we are sophisticated enough to, you know, develop our programming so it's able to parse as necessary in order to identify the data elements that are needed by customers and that the consumers are intending to share. Much like others have mentioned, you know, companies like ours, Plaid has something called Portal, which allows consumers to go in and turn off access to any app that they connected using Plaid, as well as to request that their data be deleted. And I think that that is like what we'd like to see in the industry going forward, because this is only going to work if consumers feel trust in order to permission their data. And also both the people who are, the companies that are providing the data and the companies that are receiving the data, they need to be participants in building that trust, because people still are not completely used to everything moving electronically. And we think it's a way of empowering and giving control to consumers, but I can also imagine that if you don't have trust, you might feel like you're losing control over your data.
No, I appreciate the customers front and center. We are in a trust-based industry. Financial services is all about trust. I thought it was interesting, and this is unrehearsed, folks. Every one of you has mentioned the ability to revoke access and to eliminate access. And we call that, within the industry, orphan access or zombie access, where it persists beyond what you intended. And every one of my panelists, again, this is unrehearsed, have all mentioned that, hey, we stopped that. We don't want data that we didn't get permission for. It's a net liability. So it permeates that culture of maturity and privacy is permeating everyone. And I think that's how we protect that trust. So I'm going to pivot to another question. And so how do you navigate? We see the complexities of data privacy and security, and you have these customers who are not privacy and security experts, but expect to be protected anyways. That's kind of an interesting dance to do. So Meredith, let me follow back to you and we'll go back.
Yeah, I mean, so this has evolved over time as well. And one of the things we're really proud of is that we use a way for consumer permission data, which is called Plaid Link. And we have a consent pane where the consumer has the opportunity to, decide to go forward or to stop going forward, and to see our end user privacy policy, which gives all the detail of information that is collected and how it's going to be used and retained. But behind that, we've built an entire system which is designed to make sure that we are, if we overcollect inadvertently, that we discard immediately. If the consumer requests data deletion, that we, delete promptly as they've requested. And so we basically try to make our system one where there's transparency for the consumer, there's clear consent, and then we respond to the things that they want us to do. And honestly, like that is what we anticipate, the industry is going to go forward doing. The Consumer Financial Protection Bureau is in the middle of doing a rulemaking that relates to consumer permission data. And we have every expectation that they are going to expect us to have those standards. So we just have moved ourselves towards that standard before the rule even comes out.
I think I would add that privacy protections are something that consumers want. We know the lenders want it. We know everybody in the ecosystem wants it, but consumers also want that as well. So as long as you've built a product that has privacy embedded within it by design, it's going to be well received by the borrowers. So I think that makes the back to kind of the principles that the consumer remains in control, but we are stewards of that data, and so need to be sure that we're aligned. I would suggest for participants as well that are watching this, when you're looking at who you want to partner with, aligning around data principles is kind of a key basic thing you should get out, and you should get that out early. You don't want to be talking about kind of data provisions and access and ownership and whatnot when you're in the contracting phase. You want to understand early on when you're choosing a partner how they view that, and make sure that you're fully aligned. I distinctly recall a conversation I had with a head of a large mortgage company talking about the fact that when he was first shopping for, partners to digitize mortgage process, his main question was, tell me what you think about data. And he talked to more than one provider that basically said, yeah, it's our data, we own it. And he was like, conversation over. It's the consumer's data. They own it. Next, right? Like, just so getting that stuff out early, I think, is really important if you're trying to think about how you're partnering across the ecosystem.
Dylan?
I was just going to say, so I was going to talk about our Chief Information Security Officer. Not my first startup. I bought SaaS solutions from all different types of companies. We hired our CISO very, very early in our journey, well before we started selling into the enterprise. So what generally folks will do is they'll sell into smaller companies, and then once they start selling into the big banks, they hire their CISO, they do the SOC 2 Type 2. We did all of that in our first era. We became a CRA, we did SOC 2 Type 2, we hired a CISO, not because we had been selling to banks in that era, we were just only selling to FinTechs in that era, but because we thought it was important for the industry. So our CISO sits on our sales calls, he talks about how the data is encrypted, why it's encrypted, where it's encrypted. All of that is hugely important because there's really no reason why the FinTechs and the banks should not have very, very, very similar postures with respect to security.
As do we. I put on top, a lot of data security starts with transparency. And what we endeavor to do is always provide a log and to have a way to look into what data was accessed by whom, by what system, at what time. We want to make it really easy to empower our lender partners, our mortgage processors, to understand who has looked at what, both inside of their own operation and what the Argyle platform has done when it connects to various payroll systems. And so I think there's many things we can do from a regulatory point of view, for sure, from having right compliance, from having right certificates. But in practice, I think this comes down to making sure that lenders have the tools to understand who's been accessing data and make sure that that's a transparent process for them.
No, well said. Security by design and privacy by design are so much easier to bake in up front. I wanted to pivot back for your audience to kind of compare and contrast. Brian, you told a great story about your parents walking in, getting a mortgage. Let's compare and contrast kind of where we were 5 years ago, pre-pandemic, to what it's like today in the modern world, and understand what's changed, but what hasn't.
Yeah. So approximately 5 years ago, I was working at a fledgling consumer bank called Marcus by Goldman Sachs, right? We had been 150 years, we had been an investment bank. We decided one day we're going to build a business in AWS, call it Marcus, and give people loans and do a credit card with Apple and do all that stuff. Payroll APIs didn't exist at the time. We loved Plaid. We had a relationship with Plaid. Plaid powered a lot of our products, continue to love Plaid. But there were no payroll APIs. And what we would have done at the time probably is, with our PFM tool, we would have added in income data so people had a sense of their income in our personal financial management business. And then in our personal loan business, Don, what we probably would have done is, instead of people uploading their pay stubs, we would have put in Pinwheel and said, just connect your payroll account and have that information flow over programmatically from the system of record into our service. Because I was dealing with vendors and partners, I probably could have gotten rid of some OCR vendors and some fraud vendors with respect to uploading those documents. So there would have been a reshuffling about how I thought about our data and how I thought about fraud and how I thought about PFM, to my first point.
Fair enough. Anyone else want to compare and contrast how it was and how it is?
Sure. I mean, I think there's two stories here. There's a story about the accessibility of data, and surely 5 years ago there were less payroll systems that were freely accessible on the web. Maybe 10 years ago. As we move forward, virtually all payroll systems are internet enabled, and so they can be accessed digitally. That's one story. I think the other story, though, is that many lenders still operate in an analog world. Where I don't think there's been that much progress over the last 5 years. We have clients like Regional Finance or Lake Michigan Credit Union. They run storefront operations, right? Where people are coming in with their paper, or they're making phone calls, they're sending out emails, and that's the way they've run it for the last 10, 15 years. And it's really hard for them to change. And I think a lot of what we work on here at Argo is meeting those lenders where they're at and giving them tools to power their operations the way they exist, instead of trying to convince them to make a digital app or to go head to head with Marcus. They have an operation that exists in a certain format, and we want to insert the Argo platform in that operational flow as it is today. So there's a big concentration on us powering email flows and text message flows, document upload flows, because that's how they operate. And we want to make this change as easy as possible.
Yeah, I mean, it's interesting what you were just saying, Shmulik, about that. We have found that as well, that many companies have like legacy software solutions that are not that flexible. So we're definitely trying to build products that are easy to implement into many different kinds of workflows, and make sure that the data is going to the right place, from loan origination to then managing the loan itself. These have been really technical challenges, but I think we're getting better at it. And if you think about the future, and presumably all these companies are also thinking about the future, the work that's being done now is going to allow a lot more efficiency in the future for these companies and better management of their risk, we think. So 5 years, a lot has happened. That's been amazing. But, another 5 years, I think it's going to be an even better industry. The only other thing I want to point out about the kind of 5-year comparison is we did have the pandemic in the middle of the last 5 years. And I think one of the things that our research has found is during the pandemic, both because people didn't want to go physically to various locations for safety reasons, and places may not have been open, a lot of the population in the United States got more comfortable with using these digital solutions. And I think that's been a real push that we're going to see, to the extent that not all of the companies with the legacy systems have adapted. I think they're going to have to. I mean, Lynn made this point right at the beginning. Consumers are demanding these solutions. Consumers want it to be easy. And I mean, I personally want it to be easy, and I'm sure everyone on this call does, but I think most consumers do as well.
Yeah, I think keying off of that, it's not just that the consumers are demanding it, and we saw that change during the pandemic. I think lenders also understand and have learned a lot in the last few years that if they do have heavily manual-based, human-based processes, it's really hard for them to flex. I mean, it's been rough in the mortgage world over the last couple of years with the downturn. And we all know it's going to come back. And when it comes back, the more digitization they have, the easier the lenders will be able to flex into increasing volumes without scrambling for hiring, for example. So I think that one of the biggest changes is that the more you've digitized, the more you're going to have the ability for the kind of boom and bust type cycles. The other thing I would add, and circling back, I think Meredith, you mentioned it first, but is the difference in what kind of data can be used for decisioning. It's a big change over the last 5 years. We now have this consumer-based, consumer permission data as part of a mortgage process. So whether that's identifying income in transaction data in a checking account, or being able to look at a robust set of robust cash flow analysis of the consumer. We all know credit scores don't represent a consumer's true ability all the way down the line. So if we can look at their cash flow, how do they manage their money, to really analyzing kind of outgoing payments, all of that done through open banking. I think we've come a long way in the last few years, but I'm really excited, like looking forward as to the financial inclusion that can enable. The more consumers that we can pull out of kind of being stuck in that thin file, no file box and unable to get the access to the financial system as a result. And the more we can do that through open banking data, I'm excited. That's what jazzes me every day.
If I may, just to be a slight realist. Oh, sorry, go for it, please.
Well, I was just going to say that's one of the things that I know regulators also have been excited about, is the ability to get a more varied and broader kind of data set to enable people to get the right loans. And just to kind of make very concrete what Lynn was talking about, sometimes people who are new Americans, who for various reasons are not operating in the traditional banking economy, they may be people who have steady income, or they have assets and they have the ability to pay regularly, but they may not be captured by the old systems. And there's no question that the kind of work that all of our companies are doing is making it more possible for those people, if appropriate, to get access to credit.
Right.
Just going to add, as somebody that spends a lot of time with lenders every day, they're using tools like Simple Nexus or Black Knight or Ice and Compass. And if you've taken a screenshot of it, it's really Windows 95, no joke. And these are difficult tools to work within. They're really cumbersome. And so there's a big set of proposals, I think, with lenders to modernize their systems and to provide a first-class website. There's also just the real part of it that they use tools every day that we need to plug into and we need to be backwards compatible with. And I think that's part of our job, to make sure that our tools work inside of the platforms that people are using today. And these platforms happen to be quite old.
That's an interesting point. I want to bridge to that because you all are here to help the mortgage industry and be providers of services and partnerships. Again, you're not scary fintechs. You are really here to provide service. So I was wondering if you could talk. We've tried to talk about benefits out there, how to manage security and privacy, but also about how to what it was like pre-pandemic, what the very paper world was like. And now we've got this future state we're talking about, but I'd really love for you to really showcase how each of you are able to help people in the help participants in the space, get there.
I think as previously mentioned, it's the flexibility of the technology. It's being able to be embedded in whatever ecosystem provider the lender uses, or letting the lender, code directly into your systems for maximum flexibility in how they manage it. Or we even have a method where a lender can order a report that requires absolutely no technical integration, right? So it's enabling, like you said, meeting the lender, meeting the client where they're at and where their customers are as well. So enabling, not just an online mortgage application process, but yes, we can send a link via email that they can click into and go through the permissioning process.
But either Meredith, or if not, I'll start.
Well, I mean, as we've been discussing on this panel, there have been a couple of things that have really struck me that I love about where we are today. Is not only is it kind of more efficient and quicker, which honestly is an incredibly valuable thing. I mean, I've had the experience of trying to refinance my home, and by the time the underwriting was done, being told that the interest rate had changed or something like that. I think problems like that should be kind of in the past, because there's not any excuse anymore if we can do things digitally. So I feel like that is a really, really great benefit. The other thing that I think is really important to recognize here is I think risk management is going to be much better in the system that we have going forward. I mean, look, I lived through the 2008 financial crisis, and I was at the CFPB, part of the startup team, to create the agency that responded to that. And, one of the things that we saw in the pre-2008 mortgage industry was just a ton of fraud, a ton of incomplete files, things like that, which shouldn't happen anymore. And I really think that part of what's exciting about what we're doing now is that because data is coming from the source, because it's coming through these secure connections, it's going to be better data. And I also think that because everything is digitized and going to the right place at the right time, it's going to enable just better compliance by all of the companies that are, doing the underwriting and issuing these loans. You mentioned privacy by design and security by design. I think that, they can build compliance by design as well and take a look across all of their portfolios much more effectively, because all the data is structured properly and is retained properly in order to enable good compliance. So I just wanted to add that in because as someone who comes from a compliance background, it's really exciting to imagine that we can be so much better as an industry going forward.
No, I appreciate that. Getting back to, being a fintech partner, though, I wanted to get back to something you said earlier in the prep call. We're a chain in the middle of somebody else's flow. I wonder if you could talk to the whole idea of, hey, you want to make everyone successful, your partners too.
Yeah, I mean, we are something, a technical term might be middleware. We are a part of somebody else's loan origination process or mortgage process. And I think to have a little bit of humbleness, like we're a small part, right? We provide a very valuable data set, but a consumer is probably inside of our widget for 15, 30 seconds. Right, the data that we're sending over gets populated into a specific screen or a specific set of screens, and this requires a really important dance where we are surfacing screens to a consumer just at the right moment, and we're populating data into the right platform on the lender side where it needs to be, and that this happens in a timely fashion. We can disappoint a consumer, and we can disappoint a lender in all different parts of their flow. And we spent a lot of time making sure that that's not the case.
Yeah, Don, I'd say, we do have to fit in, and we think about that technologically as well, right? So there was a whole era in which for some aggregators, you could only buy their SDK. So all of us have SDKs, and a lot of those aggregators mandated that front end be in the lender's front end. We decided early on that we have that option, but there are other options as well. I come from a background of building technology, and so we built an API only solution where lenders can actually fully control their front end solution. We also built a no code option where we'll stand up a full site ourselves. It'll point back to the lender and all that, but the lender itself doesn't need to do any implementation of an SDK, doesn't even need to use our APIs if they don't want to. So it's about sort of technologically fitting in some of the other ways that people have mentioned.
I appreciate that. I'm just, for the audience, I want them to know that you guys are here to help in a variety of ways, and you're not successful unless they were successful. I'll have a couple of audience questions I want to get to in a minute, but I want to go with an anecdote that we've often said in the industry. The aggregators in the space of you guys are actually professional services companies that happen to be in the data service.
Yes.
So, because there's a lot of free consulting you do with your partners to help them get on board and move from paper and credentials based to APIs and really help that out. I'd love for you to take for a minute and talk about what that typical engagement's like, kind of what they can expect from from aggregators in the space.
When I was thinking about background and my experience in mortgage, I've been engaged with open banking for 7 years. So was part of the legacy Finicity organization that was acquired by MasterCard about 2.5 years ago. But I remember literally, it was my 4th day on the job. I was sitting in a very large top lender's office, listening to an EVP say, "I hate people, present company excluded. I hate people. I want them out of my mortgage process. They muck it," right? And thinking about how do you get that partnership with the lender and get listen to what they're after and make sure that you have clear alignment, right? Is it efficiency that they're after? Is it that they're losing market share to competitors that are more digital? Is it that they want to have that hands-on touch? They want loan officers directly engaged, but they want to reduce kind of paperwork. They have complaints from consumers about second and third and fourth requests as the loan goes on, which all of the services you're talking that are represented here eliminate completely. You don't have to bug the customer again to get an update on income or assets or employment through our solution. So I think that partnership of really understanding what the lender is after and not assuming that is, as we're coming into that conversation, not assuming that we know.
Yeah, and I would kind of echo some of that I think we engage with our customers and potential customers in discussions about what their future is and what goals they're trying to accomplish. So how will they like to in the future have very hyper-personalized products and user experiences? What pieces can we add in to make it more personalized the way they would like it to be? Also, what kind of additional data they might need to make more informed decisions. And then we actively look to source that data so that we can enhance our product, which enhances their product. The other thing that I think is really important is we do look very closely at our customers' ability to convert consumers into their customers. Even though we are a B2B company, we are supporting businesses that are making these loans. Their success with their customers is absolutely critical. We wouldn't be successful if they weren't being successful. And I sometimes, think about this concept of conversion and what does it really at its root mean? What it means is that a consumer is accomplishing what they're trying to accomplish, which is they're actually trying to get the financial product that they want. And so we do spend a lot of time trying to understand what that journey is so that our customers who are directly interfacing with the consumers can be successful.
Mute there. Shmulek.
Yeah, I mean, I like to start as being a trusted consultant where we can come in and understand what is the current way that a lender is processing loans? What are their current pain points? And also, what are the pieces of their operation that are working just fine that they don't need any help with? And getting that list together. We don't want to change stuff or provide solutions to things that aren't broken. And I think that Meredith is making a fantastic point, which is that we're going to be Argyle is at some point going to be altering some sort of consumer interaction point. We want to be really delicate about that because that can affect revenue, that can affect margin, both positively and negatively. And so we take a lot of care to make sure that we're understanding what needs to be improved and setting good goals around it. And that needs to have different approaches, right? Some lenders want to send emails, some lenders want to use an SDK, some lenders want to have foot traffic, and we want to understand from our clients, from our lenders, what they're trying to achieve, and then providing tailored solutions based on that instead of the whole umbrella of the 15, 20 different solutions we have.
So, Don, I would say we're not consultants, but every SaaS sale we know is consultative. And one of the ways it manifests for us is, how do you get someone to link, right? There are some products and services where we see people linking at really high rates and some at lower rates. And it's a function of communication and carrots and what sort of is in it for the person that needs to go through this process. We have learnings from the biggest banks and the biggest neobanks in America, right? So we know what's working for Cash App in terms of getting people to link. And so when we teach you about implementing our SDK and getting people to link, we know what carrots have worked. We know how to explain it to people to optimize that actually happens.
Gosh, I'm waiting for Cash App to generate mortgages. That will be the day.
Right. Here's what I'll say though. The incentives and the experience that lead up to it, you get learnings from any type of area, right? And I know Plaid, when I was buying Plaid back in the day, right, they had a lot of data on why people link, where they link across all their different products. So it's hugely important.
Absolutely. Audience question. Earlier I heard Plaid note, and I believe it was MasterCard Finicity, they were CRA can defend borrower inquiries. Do they monitor and update borrower status beyond the transaction, or do they eliminate credentials once final?
Yeah, great question. I can answer for MasterCard Open Banking. It depends on the use case. So when we're working with a partner that wants the consumer to permission externally held away accounts, for example, if it's a financial institution, perhaps we're pulling data for that mortgage transaction, but maybe that bank also offers PFM-like services. And so there's an ongoing connection of those accounts for that purpose, for the financial institution to turn around, take that held away data, represent it to the customer to help them with their budgeting, or help a wealth advisor to get a full view of the consumer's assets, as a couple examples. In a case where we're just pulling the data for the mortgage use case, the data is pulled for the mortgage use case, we might keep the accounts connected until that loan is closed. I think I mentioned earlier, no second requests from consumers to bring in the fresh pay stub or bring in, right, the additional asset statement. Once the consumer's permission accounts, the lender can go back and refresh reports. But once that mortgage is closed, we delete access to the account. So we delete the credentials. We have no longer the ability to go and get that data.
Appreciate that clarification.
I was just going to say, I mean, it's fairly similar with respect to Plaid. I mean, I will say that the move to kind of API-based OAuth access has enabled us to avoid collecting credentials in many instances, and we rely on tokens in order to have access. But whether access continues beyond the individual transactions really will depend on whether that is necessary to accomplish the consumer's goals and to kind of give it, you know, real clarity. So for example, if you have a personal financial management application that you're using, you're going to want that application to update regularly so you can see what your different account balances are. it's an example of like a really, really common type of application that relies on digital financial services, because you can get real-time data from many, many different sources, put it into one place so a consumer can see everything that they're doing. And actually, some of our most exciting customers are doing things like that for consumers. And so in that instance, you might have, reoccurring or ongoing access. But the credentials, particularly if you're in an API-based system, will never actually be collected, or if they're collected, they'll be deleted as quickly as possible.
Yes, and just to clarify, as I mentioned, deleting credentials, that to me includes deleting the tokens, right? So whether you got it through tokenized access, which the majority of our traffic is through tokenized access, we don't collect credentials most of the time. Yeah, when the consumer says no more, or the lender says done with the loan, then we're either deleting the credentials or deleting the token that gives us that access either way.
Gentlemen, care to weigh in?
Yeah, I think the two companies that are based on patterns for their names operate very similarly here. So it's very much based on what the end application is, the end product is. There are many products that just require data one time at a specific moment in time. And in that instance, we are collecting that needed information, passing it, and then deleting everything. Tokens, credentials, and data set after that has been passed through. And then there are other applications, that are, think about a mortgage where processing time is several months, and you might want updates on income throughout the duration of that period. And in those instances, we do have to retain the credentials or the tokens through that period. And then when the mortgage has been processed, we also do a full delete. And so it very much depends on what the use case is. And luckily, this all happens with computers instead of with humans.
So Don, when I worked at a lender and was making procurement decisions with respect to what we use, we had a very clear rule. And the rule was you're going to buy from a CRA. Mm-hmm. And there was no way that was not going to be the case. We had equity stakes in aggregators. We loved aggregators, but we just weren't going to do it. So it's important to be a CRA. And we know that because we have conversations every day with banks that tell us it's important. Of course, there are two divergent views on this call, but we made the decision to become a CRA very early on because of some of that experience that we had, working at lenders where that was the case.
No, I appreciate that. And just so everyone knows, it's likely that the CFPB, based on latest comments, will put out a proposed rulemaking in October of this year. So the 1033 is, I'm expecting mid-October for it to drop. Audience question number 2 is, why has adoption of the verification services been so low? Is it about customer worries, cost, or interoperability? And I don't know that adoption services have been so low, but I'm obliged to ask.
I think that the piece I would comment on here relates back to the question about being consultants for our partners and for our lenders. And that is the greatest challenge we encounter sometimes with lenders is changing their organizational behavior. The mortgage lenders understand the trend in digitization. They know the customers want to be there. They want a streamlined process. They're trying to implement a fully digital mortgage process. We've talked about how they can tiptoe into the technology of it, right, piece by piece, but changing the behavior of each and every loan officer and underwriter and getting them to fully embrace a digital experience can really be the challenge, but that's really critical. So there is a piece there where the lender needs to really commit to the leadership required for the organizational change to actually get adoption to happen. And if they can get champion users who are all about it, and demonstrate that it works, right? That a pool of loan officers are out there, they're doing it, they're using digital. And by the way, they book more loans than the other guys, then suddenly you get the competition, you get them moving forward, but it has to come from the top. It can't just be in the sales part of the lending organization. It has to be in underwriting, it has to be in compliance, right? Keying back to the fraud conversation, it has to be all the way across that they're really undertaking organizational behavior change.
Yeah, I would agree with that. And I I would say the adoption of digital financial services hasn't been slow because we see across, the broader scope beyond mortgages, plenty of use of digital financial services, and that something like, 80% of Americans are using at least some fintech app. I think a couple of things that may have slowed the adoption in this particular part of the industry are things that Lynn just said, but in addition, some uncertainty because both Lynn and Brian talked about being a CRA and getting data from CRA data, provider or not. I think that there's uncertainty right now about what is expected, where there's consumer permission data, which is pretty different than the traditional credit bureau data. As you mentioned, Don, the CFPB is engaged in a rulemaking. We expect to see a proposed rule in October. I think that might start to answer some of the questions that have led to a little bit of concern about, like rushing ahead into the future digital financial services world.
Brian or any thoughts on why adoption has been low?
I think some of this might come down to just what people technically put under the banner of a fintech service or digital service or digital verification. There are many flows that exist right now that are digital, and perhaps they just don't feel that way. But yes, I think we've actually come quite a far way on that.
Yeah, I would say I think Shmulik and I agree. Like, I don't know that I agree with the premise, but payroll aggregation is still in the first early innings relative in some ways to banking aggregation. I think Shmulik and I agree, like it will be ubiquitous. So we're sort of past the point where we're debating whether there will be a ubiquity. It will happen. What it will look like and who the players will be, of course, is the game that we're all in. But I think we all share confidence that it will be ubiquitous.
And in full disclosure, FTX has a payroll working group, which most of you are on, helping to define a common standard.
Glad to be part of it.
Yep, I really am. I appreciate it. Argyle co-chairs that. No pressure. All right, so winding up, time speaking. So I really wanted to leave you with the audience. What does the future look like? What's it going to look like, 5 years from now? And last thoughts for the audience. Meredith, you started us off. Why don't you go ahead and start?
Sure. I mean, look, I've been a consumer advocate for a huge chunk of my career, and I envision a future where consumers are in control of their own data. And just touching on a point that, Brian made me think of a moment ago, it's not clear, the law does not say today that consumers get to make decisions about their data in all scenarios. The law is pretty good on banking data, but, we do need it to be very clear that anyone who's holding data of consumers has to recognize that is the consumer's data. It is not the company's data. And so I imagine a future where consumers have a lot more ability to control what happens, and that gives them access to more opportunities. We're talking about financial services today, but that should exist even beyond financial services as well.
Lynn?
Yeah, I think what I'm excited about looking forward is that we get to a point where the standards are ubiquitous, as we've been talking about, but that the customer, when they come across the ability to share data, it's really familiar to them and they do so readily. And to get there, it means we have to be sure customers know their rights, and so they feel confident in the process. Right now, yeah, I think that's, I'll leave it there. I think that's definitely the place where we can get to, and it's coming, as Brian said. It's not if, it's when, right? It's definitely coming.
So Brian, with that, I'll segue to you.
I just specifically want to speak to sort of the gig economy, right? There's a whole host of people where it's a lot easier on a relative basis to tell people how much you make. Several times a week, a DoorDasher, shows up at my place to give me my lunch, right? These people need to get underwritten, but they're not making income in a way that my parents necessarily made income. So that's why Etsy is a platform, that you can use with Pinwheel. We need to think holistically about where people make income and how they work and where they work if we're going to meet their needs.
Shmulik, you get to bring us home.
Yeah, I think that as a mortgage, for the mortgage industry in particular, we're all trying to get to a place where maybe it's not a one-click mortgage, but it's a few clicks mortgage, and it's not 100 clicks or 100 different flows that a lender needs to go through, and it's not a cumbersome process for a consumer where you have to log in and upload pay stubs and provide documentation and make a phone call and provide a streamlined, secure process for the consumer, yes, but also a streamlined, secure process for lenders and for lending operations. So much of what we want to push forward with is empowering lenders to have a more automated process. And so I think that's coming.
Thank you, everyone, for your time today. I always learned a lot. IA, over to you.
Awesome. Well, thank you all so much. It was very exciting, very invigorating for our audience. And I think that is a wrap. We will see you guys tomorrow at 9 a.m. for our demo day.
Enjoy, everybody. Thanks for the time.
Thank
Bye,
you, guys.
everyone.